Hello, everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the non-farms payroll and the opportunities its publication will present. We'll also talk about trading strategies, which will be of great use to you before, during, and after the publication of the report, which should help to improve your chances of successful trading. My colleague Anna will also give you some excellent technical pointers on trading in a moment. My name's Sasha, and I'm a financial analyst from the research department at Fortrade. I'm delighted to have you with us, and thanks for your comments. If you have any questions, I will do my best to answer them, or please call us and ask to speak to a senior account manager who will be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFDs, losses can be incurred too, and you need to be aware of this. Now we would like to present our offer that is exclusive to those watching this webinar. A special code will appear on your screen during the webinar, and I will repeat the special code at the end of this webinar that you can use to take advantage of our special offer. Be aware that this offer will expire in 24 hours, and that this new offer applies to all of you, not just second-time depositors. So please stick around. It will be well worth it. If you make a deposit within the next 24 hours, you can receive a balance bonus. If you deposit 1,000 euros, you will receive a 2% balance bonus. Deposit 2,500 euros and you will receive a 4% balance bonus. Deposit 5,000 euros and receive a 5% balance bonus. Deposit from 5,001 to 15,000 euros and your overnight interest rate will be covered for 1 month. Deposit 15,001 to 25,000 and your overnight interest rate will be covered for 2 months. Deposit more than 25,000 and your interest rate will be covered for 3 months. You're free to use this bonus however you choose, but you might find it beneficial to use on one of our market opportunities. For those that don't know, a market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it, if you want to. Market opportunities are produced by the research department on a daily basis, according to market conditions. A market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. Here is an example of a market opportunity. On the left, you can see fundamental analysis on what's going on with the pound-dollar currency pair. Below, you can see some geopolitical events that can influence the currency pair. It's important to look at the pivot point on which the calculations are based. If the price reaches this level that you can see on the right-hand side of the screen encircled, this shows the right moment in our estimation to come in and open a trading position. You can see that this is a weekly market opportunity, although we have regular daily trading opportunities. You can see the trend direction here, which is up. It's important that you know how to use the stop loss and take profit options. You have support and resistance levels here. At these points, you can put a stop loss and take profit, and further down you have calculations. If you close the position using take profit, you can expect those kinds of profits. If the price is going against you, then you can potentially have a loss of this amount. Support 1, 2, and 3, which is in red. The pivot point is the starting price for opening a trading position. The support and resistance levels here are for daily, weekly, or monthly terms. Finally, profit and loss calculations are based on a one-lot trading volume. So why is the NFP important for the financial markets? Well, the NFP, or the Non-Farm Payrolls Report, is the release of data on US jobs growth over the previous month, and it's published by the Bureau of Labor Statistics, usually on the first Friday of the month, following the data. It's the most eagerly awaited monthly data by world markets. Morning trading volumes are usually slim in European markets on the day of the release, as they await the afternoon release time. The headline number in the report gives the number of jobs. that the US economy has gained or lost over the previous month. A more important number for the markets, however, is the difference between the actual change and the consensus of estimates by analysts and economists published in advance. The market reaction will depend on whether the published figure is above or below the consensus and by how much. Over the past few years, non-farm payroll data has been very positive, but NFP estimates have failed to meet expectations 6 times over the past year. Last month's figures were below expectations, as I will explain in a moment. As you can see, the unemployment rate has significantly improved in recent years. The unemployment rate approached 8.5% during the financial crisis, but has fallen since. Since January 2017, the unemployment rate has dropped from 4.8 to its current rate of 4.1. Average hourly earnings is important since an increase in the figures indicates a possible rise in inflation and in the value of the dollar, while a decrease in AHE tends to push the dollar down. Month on month, average hourly earnings were 0.3% in January. The NFP release comes together with the unemployment rate indicator on the first Friday of every month. When this is due, the trading week is a range-bound one for the forex market, and after the release, traders start positioning for the next time the Fed meets to see how monetary policy changes in the meantime and how to react. When the actual number differs from the forecasted one, the market travels. Usually traders try to take positions for the NFP in advance by looking for clues from other economic data, like the ADP jobs report or private payrolls. It's believed that private payrolls and the NFP data are linked in a directly correlated fashion, but this isn't always the case. The unemployment rate is part of the Fed's decision-making process to move on rates too. As a rule of thumb, a lower unemployment rate is better for the economy as jobs are created, and this could result in the Fed hiking rates. Higher rates lead to a higher dollar, and traders usually buy it. There is no such thing as full employment in an economy. By the time the unemployment rate has fallen to below 4%, a labor shortage has already appeared, and experienced traders know this. Forex trading is about anticipating what the central bank is going to do with interest rates at the next meeting, and the NFP is the perfect economic release to position on the right side of the market. The non-farm payrolls report released on February 2nd, 2018 showed that the US economy created 200,000 new jobs in January, more than a predicted estimate of 184,000 jobs. The jobless rate remained at 4.1%, in line with expectations. The US dollar index strengthened by 0.72% following the publication of the release, closing up by 0.6% at the end of the session. On this graph, we can see the reaction of the market upon the release of last month's NFP report on February 2nd. As already discussed, the unemployment rate was in line with expectations, and NFP was higher than expected. But higher than expected average hourly earnings was the key figure which caused the dollar to grow in strength and negatively impacted US stocks. The year-on-year AHE figure of 2.9% was the largest annual gain in over 8 years. Traders felt that the increased figure meant that inflation would rise and potentially bring about sooner than expected and more frequent interest rate hikes, which supported the dollar, as you can see here, and depressed stock prices. As you can see on this graph, there was volatility with the euro-dollar too, during and after the release. But the euro-dollar fell by 0.2% following the NFP release. Since then, we can see the euro-dollar has continued to decline, since other indicators such as a higher than expected rate of core PCI inflation confirm speculation about AHE. The thing to remember is that the euro-dollar is characterized by volatility at the moment. so the NFP can represent a trading opportunity for investors. Economists expect that February's NFP will remain at January's statistics of 200,000 new jobs added, and that the unemployment rate will fall from 4.1% to 4%. But traders would be well advised to keep an eye on the average hourly earnings. If they are above expectations, it may cause the dollar to resume its upward trend. Average hourly earnings are considered a sign that inflation will rise. And if inflation rises, there is a greater chance of interest rate hikes, as some economists have already speculated there may be 4 interest rate hikes this year, rather than anticipated 3. The Fed decided to maintain its interest rate at 1.5% at their last meeting in January. What is certain is that reports like the NFP can have a major influence on the financial markets. Now that you've been informed, the important part. I will present 2 possible ways of how you can trade on high important news announcements like NFP. Perhaps the simplest strategy for a less experienced trader is to use the news long-term strategy, which I will cover last. In fact, most successful traders take the news long-term strategy into account. That said, if you've never traded during one of these events, or if you don't feel comfortable trading on a high-impact announcement, you can use a demo account and sit on the sidelines. However, the non-farm payrolls is a great trading opportunity, and if you take note of these strategies, you stand a better chance of success. Of course, you don't have to use these strategies, or you may prefer to continue to use your existing trading strategy. The slingshot strategy looks to capitalize on the turmoil that may arise during an especially impactful or important event. In this strategy, the trader wants to look to go into NFP with their full positions so that if the volatility created around the announcement may be able to push their trade deeply into profitable territory, they can look to take advantage of that. The slingshot looks to scale out of winning positions as the trade moves in the trader's favor. And a variety of entries or entry strategies can be used to trigger the initial position. Support and resistance identification is a necessity before opening any positions. Traders can also take this a step further by looking to the hourly or 4-hourly charts. On MetaTrader 4, for example, to determine any trades that may exist leading into the announcement. This way, if the biases going into the NFP take place after the data is released, the trader can be on the right side of the move. Support and resistance is important because that's the cut point a trader can use to close off the position if prices are going to move too far against them. Stops for long positions can go below support, and stops for short positions can go above resistance. So if either of these levels are broken, losses can be minimized. Traders are advised to investigate stop distance on their positions ahead of a data announcement as heavy as NFP. Spreads can widen quickly as market makers don't want to take a loss on the announcement. When spreads widen, stops can be triggered before prices begin trending, and this can be disastrous for the trader. A short slingshot strategy would involve taking the reverse or an opposite approach. In the entry bar, we look to see if it will penetrate the high of the setup bar and so on. If you decide to use the slingshot, you're advised to wait at least 30 minutes after the announcement of the official figures, since volatility will be very high, and it's very difficult to understand or to identify the right trend. Non-farm payrolls can be a game changer. A big beat or a miss can stop a trend dead in its tracks and create massive reversals. But this doesn't happen every month. In many cases, enormous volatility is created around the announcement with some slight follow-through afterward, only to see trends resuming their previous trajectory. This can potentially be a huge opportunity for longer-term traders to pick up or add positions at a much more favorable price than they would otherwise been able to. Let's look at an example for more clarity. So let's say you're bearish on the euro-dollar for whatever reason. Perhaps you're just a really big USD bull, or maybe you simply don't believe in the European economic recovery. Whatever the reason, you know that what you want is to get short eurodollar. After spending a month confined to an inadequate range near the long-term support, you haven't had a great entry opportunity in the pair. You can go into NFP looking to do some bargain hunting. And now my colleague Anna from the research department will show you some graphs and take you through some technical analysis.
Hello, everybody. So today, let's go immediately on some graphs. First, we are going to look at Euro-US dollar currency pair. The most important thing here is that these labor market reports, which will be published on Friday, will have the major influence on US dollar. So today we are going to analyze a little bit more about what can we expect from euro dollar currency pair, British pound, US dollar, gold, and US dollar Japanese yen. So let's go first and look at euro US dollar. So in this graph we have, this is like weekly. So every single line of this and candle represent 1 week. So this is pretty much a long-term trend, and we can see it's downtrend. So right now we are here, pretty close to the descendants resistance line, which is this red line. So right now we are here, and we can see that this downtrend is actually very, very strong. So right now, what we can expect, and of course, depending on results on NFP and unemployment rate, which is going to be published on Friday, if the results are better than expected, then of course that US dollar will start strengthening, and we can expect actually that this currency pair will go down. On the other side, if the results are worse than expected, we can expect and maybe we will see some further movement up more near this descending line. So let's go and see on a daily graph, which is more precise. And for example, okay, so here we can see that subtrend here is actually uptrend. So this is this uptrend actually started somewhere here, and it was in January 2017. So for a long time, this currency pair actually is in a uptrend. So right now we are here, and this is a kind of consolidation. So we put the Fibonacci levels here, and this is from trend, this uptrend from November 2017 up to the January 2018, and now we are in the retracement stage. So it's a kind of consolidation. So we have like 3 waves. This is the third wave actually forming, and we are here now at the top of this channel. So actually, what can we now expect? So if the results are better than expected, US dollar will start strengthening, and we can expect movement down of this currency pair. In that case, levels of support are 1.2274, and the second support is 1.2154. On the other side, if we have some bad results for US dollar and it starts decreasing, we can expect that the price will go up and break this upper line of this channel and go towards 1.2528 and even further 1.2660. So this is what we can say about the euro dollar actually. And keep in mind that today is Wednesday and this publication will be on Friday, so we have enough time and to prepare ourselves and to see actually what will happen on Friday. So let's go now on British pound US dollar. So again, let's go and see what's going on some longer time scale. And here we can see as well pretty similar graph that this is a long-term downtrend, and we have this subtrend which is up here. You can see it. And if we go on a daily graph, again, Fibonacci, and Fibonacci here is from June 2016 up to January 2017. And right now we are here around the 61.8 Fibonacci level. Again, we have this sort of a more steep consolidation or even here retracement from this uptrend. And in this case, with British pound and US dollar, we have even more space here to rise. So what does that mean? That means that this currency pair can go even further up before it starts retracing again after bouncing from this descendant, resistance line. So here, let's enlarge it a little bit. If we have a worse than expected results in US dollar will start falling, and this currency pair will go up. So the levels that we can expect is 1.4075, and the resistance 2 is 1.4294 or 95, to be more precise. If US dollar gain better than expected results, then we can expect like a strengthening of US dollar, and this currency pair will go down. And the first support in this sense will be 1.3690, and the second one is 1.3497. Let's go quickly on gold. Again, long-term trend is here, it's down, but you see here we have a little bit of retracement, and the price is already as well at 61.8 retracement level and start consolidating. This subtrend is as well uptrend. This was all of this currency pair or gold. In this case, we can see how strong is US dollar in influencing the currency market and the commodity markets as well. So let's go here. So we can see actually that the price is a sort of consolidating and forming in a way. Let's move it like this. Could be more obvious for you. So you can see here that the price is actually forming a triangle, and the steeper side, of course, is this resistance line, descending resistance line. So what we can here expect is some bounce up, and afterwards, that the price can go down. And to see what is our expected levels, of course, again, depending on what will labor market reports show. And if the results are better than expecting, weakening of US dollar and gold price as safe haven instrument will increase. And this time, the price we can expect as a first resistance is 1,348. And the second resistance is 1382.70. The first support is 1311.09, and the second support is 1266.55. So if this resistance line, descending resistance line, is broken on Friday, that means that price can even go further here and continue with this generally uptrend. So let's go down to US dollar Japanese yen. Here we have previous uptrend, which is broken, and we have this retracement, which started actually 2015. This is on a really like a longer scale of Fibonacci level, started from 2011, and this trend was over 2015. Why we are using it? Because it's still actually still it's on, and we can see how the price is bouncing and moving actually between these Fibonacci levels these days as well. So let's go on a daily graph to see what can we expect on Friday. So these are the moments, this is the points where this trend was touching descendant resistance line. To increase this a little bit. And here we can see this is the daily chart again. Every single one of these candles represent one day. So we have like few days, 2 days actually, up to the Friday and the publication of this report. So right now we are here and we are still in this sub downtrend. If this trend continue, that means that US dollar actually will continue to weaken, and of course this time it will depend on labor market reports, and if they're worse than expected, we can expect that this downtrend continue, and in that case the first support level will be 103.94, and the second one is 100.79. If we have like opposite results, worse than expected, Then first resistance will be it will be possible to reach, and it is on a level 108.77, and the second resistance is at 111.32. So all of these currency pairs and gold as a commodity represented here will really in a big way depend, and the price movements will depend on US dollar, especially when we have this kind of important reports like NFP is. So this was all for me for right now. Let's go back to Sasha.
So thanks to Anna. In case you missed the promo code during the presentation, this is your opportunity to take advantage of our special offer, which will last for 24 hours. The promo code is FTD1X. Again, we feel it's a great option to use our special offer on the NFP or trade using one of our market opportunities, but the choice is yours. And of course, at ForTrade, we'll be following any developments that affect the markets very closely. So please do get in touch with a senior account manager if you have any questions or want to take advantage of the trading opportunities that this event will present. Until next time, goodbye, and please join us at ForTrade soon.